All right, everyone. Welcome to the forecast for upcoming trade week call. My name is Steve Vetterol. Today is the 13th of June, and man, time flies this year so far. Craziness in this C-19 pandemic. So welcome, everyone, to the Saturday call. I know we've got a lot of people just entering into the room right now. While we're doing that, I'm going to go ahead and read the risk disclosure. Do me a favor, if you could, please. Let's do it in the chat box. Go in and tell me if you can hear me okay, if you can see my screen okay. Should be the risk disclosure screen. All right. Trading the foreign exchange market carries high risk and may not be suitable for all investors, as we certainly have seen the last couple of weeks. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So do keep in mind, you're welcome to start asking Q&A, but do not do it in the chat window. Please do it in the Q&A window. Much appreciated. So if you're sharing any of the results from using Alexander, Iris, Einstein, please do not use the term company recommended settings. Auvoria Prime does not have any recommended settings. I suggest settings, essentially, right? Occasionally I'll have a panelist come on and talk for a little bit, an expert in the field, someone that's been dove into this in many cases a lot longer over the last year than I certainly have. So Auvoria Prime is not a financial advisory firm. We just license software that users can use however they want and at their own risk and direction. Some software does not come with default settings upon initial setup, which users have the ability to customize. That's the purpose of meetings and all kinds of fun stuff I've done in the last week, is to get these settings dialed in for any event. But Auvoria Prime has nothing to do with the customer's brokerage account. We don't solicit or take investments. We don't recommend any broker. Again, Auvoria Prime just licenses software and sells amazing education users can use to learn and potentially benefit from. So with that being said, what I'm going to try and do in these calls going forward for those that want sort of like the quick hit is just to go through the news stories real quick. And then I'm going to have some comments on what's going on with some of our live accounts and some of our demo accounts that we've been getting set up. So I appreciate everybody's patience over the last couple of weeks. We've had, conversions to deal with to the new VPS. We've had talks with the developer. I did see the email, which I thought was interesting. So we're going to have some flexibility with adjusting software, being able to jump with your subscription to different software. I don't know when that's going to be implemented, but that's certainly a very positive note that I wanted to make sure everybody heard. So if you're not following me on Telegram, it's Trade Tracking with Steve Vetterol. I highly suggest that you spread the word and get everybody subscribed to the channel. Let me shift the screen over real quickly to Forex Factory. So one thing to note also each week in the very beginning, I'm going to run through just a quick hit of what's going on. Then we can do a little bit of a deeper dive for those that wish to stay, although I would encourage everybody to stay, but at least you can find out a plan for the week right in the beginning of this call once I get past all the crap. So now that the disclosures are out of the way, the developers are running the software this week. I suggested last Saturday that the software be turned off for live accounts unless you are an expert and you know what you're doing. Just because we saw a lot of crazy volatility, especially in equity markets, which had a big sell-off on Thursday, huge, to the tune of almost 5%. So it's as I was speaking with a couple of our leaders and directors, it's really a matter of, is the dog wagging the tail over the last week, or is the tail wagging the dog? And there's just unfortunately been a lot of uncorrelation in markets, meaning that it's just a crazy frenzy, right? It's hard to read what's going on. There's news, there's a pandemic, there's a heck of a lot of people unemployed globally. Corporate earnings are going down the toilet, but yet all equity markets are lifting into this, which is just global central and Federal Reserve banks lifting all the boats. So it is a really rocky let's just call it a week of landmines, if you will, in terms of news events. And this is the big one right here. For anybody running the JPY ring, the problem with this is that monetary policy statement coming out of Japan, it's almost always tentative. We never know what time it's going to be. It generally is in the morning in Japan for their time zone. And then you can just do the math. But just be wary of this event. This is absolutely one of those ones where if you do not have the software turned off for news, a couple hours surrounding this, I would probably do for this particular, or just have it off for any of the JPY ring stuff on Monday. So Tuesday, we've got U.S. retail sales. We know it's going to be really rotten. More importantly, at 10 a.m., keep in mind this is East Coast time, we've got Chairman Powell coming in to testify. So this is the annual monetary policy report. So he's going to be in front of the Senate Banking Committee. It's a live broadcast, so anything goes. Some of the comments that Powell and regional Fed governors said last week were outside of what the market had thought they were running with, and that's why equities took a monster hit on Thursday. And as I've been squawking on the box to everybody, including all my clients, all my followers out there, we have lightened up tremendously in equities in almost all client accounts well into the early parts of last week for the reasons that we saw on Thursday. So with that being said, there's a lot of GBP stuff coming out of the UK on Thursday. I think that it's almost like you can make an argument for the entire week trading any ring related to US, NZD, GPY, JPY, GBP is going to be a problem. And I certainly wouldn't argue with that. But, so be it. So if you could please, the chat window, just put your comments and Q&A in that window here. Just set that up. All right, I'm going to have, let me just make him promote you to panelist, Tyler. I'm going to have Tyler come on and do a little chat about what's going on. I'm going to stop. Are you okay to talk, Tyler? You want a couple minutes? You want me to run through some other stuff?
No, we're good. I'm
good?
okay.
Good. Okay, yes, let me stop sharing the screen here for you.
Awesome. Well, the first thing I guess I want to talk about, Steve, is, I know with these live accounts that we are running, and so everybody knows you will be getting FX books to these accounts that we promised. I know we promised some Jesse accounts. We promised some of these other new live Steve accounts. So we have the live. We have 2 live accounts running what we call the Steve Federal strategy, right? And with that being said, those accounts, we have a 3K and a 25K. Now, Steve's advice this week was that if you had no open trades, that you should have possibly looked as a conservative trader to stay out of the market, right? Now, we don't control your account. It's up to you to make your decisions, and you have that full control. But in understanding that, we also said, okay, we introduced high volatility settings a little over 2 weeks ago, and we saw how much of an impact they made in people's accounts. And we said, hey, well, being that this is one of those weeks where we're telling people not to run, but there's probably going to still be people who do run, let's show what happens and how high volatility settings can handle drawdown. So what I first want to talk about, and I'm going to just share my screen and show the MyFX book that we have on the trade tracking channel for this live 25K account. And when we go into the trade tracking channel here, I'm pulling up the screen. Just give me a second. Steve, you got to put screen sharing on for me real quick.
Yeah, I have you as panelist. So I just make you co-host?
Yep, I think that'll do it.
All right, co-host it is.
Yep, we're good. I can share screen. So first thing, we want to take a look at this account. So this is the 25K live account. Now, when we educated on the high volatility settings, we said that you could indeed raise the stop loss if you wanted to. Now, we sent out an update about this account at the beginning of the week, and we said that we would raise the stops on a case-by-case basis. We didn't raise any this week. And in fact, we hit 5 stop losses between UJ and EJ. And, we lost a few percent. We were up about 13.4%, and we lost a few percent. And, okay, what I want to stress about this is, first off, EJ went through a few trades of stop losses. We're talking, again, this week, a little over 400 plus, almost 500 pips in moves from where my software entered a buy. And knowing that here, all right, when we look at that, you have to know that you want to be able to withstand those large moves. This software account blew through a level 0, a 1, a 2, and a 3 trade on EJ stop loss wise. And you look at it, and the drawdown still hasn't exceeded 10%. This is what I want you guys to focus on, is risk management, because I see so many people that they either are risking it to get the biscuit, they get into this high drawdown, and this account's managed to go through all of this nonsense and all these market conditions, and you see it hasn't touched an 11% drawdown. So even this week, with hundreds of pips being moved and it hitting stop losses on EJ and even 1 stop loss on UJ, it still didn't exceed its highest drawdown. It took some losses, but the equity is coming back up. And that's what I wanted to show, because I think that's the most important thing, is that if you are going to run during times when you were not necessarily given, the financial advice not to run, but a market outlook that, hey, it doesn't look like a really good week to run this strategy, then understand if you're still going to do it, you should practice some form of strong risk management strategy. It's good to have a risk management strategy when it comes to using these different products that we have. So just thought that was very cool. And then when it comes to our $3,000 account, we actually started a brand new $3,000 live account this week. And, Steve's been running, it's on his account. He could show you. And that account, actually, believe it or not, even with the stop losses still at 250, it hit multiple stop losses itself, but the $3,000 account actually made money. Whereas the 25K took some losses, the $3,000 account on a brand new fresh week, it's actually up $58, even hitting multiple stop losses. So it's at a $3,058 balance right now, and running high volatility settings, it's only right now on $150 drawdown on a crappy week. So why, again, are we stressing, hey, these high volatility settings? Because if you've been studying them, or if you haven't studied them, please go back to I believe it was the June 5th webinar, and Steve just pulled it up here, the $3,000 account. You can see this account started, and right now, yeah, it's in some drawdown, but if you look, it's in 6% of drawdown, but its week's performance is negative 4.32%. Well, what does that tell you? That tells you that this account has closed about 1.6% profit last week, even while hitting stop losses, running the high volatility settings. So again, this is just to show people and educate that, hey, even with hitting some stop losses, but using high volatility settings, this strategy has performed amazing during times where other people may not be having the same experience. So maybe if you're looking at the results we're showing you right now and you had a totally different experience the last week or two, you should ask yourself, did you tune into that original, I believe it was the June 1st webinar? Is that the date? Let me look at the calendar right now. So for that one we did, Steve, actually, no, that was the 31st of May, right? So if you didn't tune in, or no, the 30th of May. Yeah, you didn't tune into the May 30th forecast call. I would go back and tune into that one to learn more about these high volatility settings and why they're so cool. So just to give you a quick breakdown of where this came from and what it is again, all we did is we flipped the position size multiplier and the range multiplier. You see there, the range multiplier is at 1.35 and position size is at 1.15, which by out the box settings, right, that come in the software, those numbers are flipped. But if you flip those are what we call our high volatility settings. And if you want to have a better understanding of that, please tune in to that May 30th forecast call. It's in your back office in the recordings under resources, Einstein Alexander forecast calls, and then go to the proper date. That's just such an incredible call. And you're going to get to see a lot of data that was presented to back why these settings make such a difference in results during unpredictable times. But we want to talk about that also, Steve, so we can talk about it real quick. There are also a few accounts of Jesse's being ran, and I know he started actually a 10K account last week. I'm going to have my FX books attached to all of these, but you can't see it right now, but we'll get them out. He started a 10K account, fresh live account. I believe he was using Alexander on that one so that he could approve or decline the trades based on his final discretion, meaning he wanted to go look at the charts and see that he agreed with the trade. But last week on Jesse's strategy with the one pair and GBP NZD, he did 4% close profit and actually hit his trailing equity on that 10K account. It did a trailing equity and stopped out with over 4.5% on that 10K account last week. So just another cool thing. If you guys also haven't been tracking Jesse Cameron, the XKJ Jesse strategy that he has, you can see that as well in the back office. Get tuned into his tracking channel and watch his videos as well for more education. But right now, I got to tell you, both strategies, they have their great weeks and they have their weeks where you might want to find some form of high volatility setting to have a medium. And remember, in trading, you're going to have great weeks. You're going to have bad weeks. The key is that when you have bad weeks, that you stay alive. And I think a lot of people are focusing so much on trying to maximize their profit that they're not focusing on the most important thing, which is staying in the game. And I've been trading now for 5.5 years. Steve will tell you he's been trading for 15 plus, and you see him say it all the time. Sometimes it's best to just have your risk and be willing to walk away so that you can live another day in the game and continue to trade. And understanding that, like I said, just have proper risk management. And, if we say, hey, you probably shouldn't run this week, don't take that with a grain of salt. And when I say we, I mean Steve, because I can't give you any form of financial advice. We'll make that very clear. I'm not licensed to give any financial advice. I cannot guarantee you anything or share any settings with you. Simply just tell you about my experiences with this product. But with that being said, this is just some insight for you into how the live accounts Steve is managing are going, and you can see them firsthand. Even though we said, hey, we wouldn't run a fresh account this week, we tested it ourselves with high volatility settings because we also wanted to see how they would perform during a time where most people should have ideally not been running. And then we wanted to come bring that education to you so you could also see how they did firsthand. But with that being said, Steve, I'll throw it back to you.
Yeah, no, man, wow. Applause. Amen. That's all I got to say. So the bottom line is, if you look on my trend, the trade tracker channel on Telegram, we actually talked a little bit about that. So the settings were ran on the live 25K account. I made a post of that, the high volatility settings and the 0.01 per 3K on the 25K account. So, and this one here. So I think that a lot of the questions I've gotten over the last couple of weeks have surrounded things. I know, Tyler, we had talked about this morning, and just for everybody's edification, we have started a round table with some of the top software, not only traders, but some of the leaders. A lot of these guys just real experts in their own field. Just a bunch of fantastic observations that have come down. One of the ones that I want to echo, and maybe if you want to make some comments on this, Tyler, I heard the most of, is people getting in and starting to play around with the stop losses.
Yeah.
And there just hasn't been enough data on that for us to come out and start trying to change all that around. Unless, again, you are an expert on the software. The whole stop loss thing was set at 250 for a reason. Now, do keep in mind, we've seen a lot of 250 to 300 pips moves on the Euro ring in the last couple of weeks. So I don't know if you want to make any comments on the stop loss.
No, absolutely, I do. I would like to. So the first thing is, if some of you have seen, there's a resource that's gone around. Again, I also show it in this May 30th forecast call, where it's basically an Excel calculator that some distributors have. It's not an official Auvoria Prime resource, but it does help in making some more educated decisions with your settings. And I show some examples and visuals of that in the May 30th call. But what's so important is understanding what the maximum amount of pips you can handle is if you're going to increase those stop losses, because I see a lot of people trying to increase them. I also see people trying to decrease them, and I would never recommend decreasing them with this strategy. It's just not going to work out in your favor, in my opinion. Again, I'm not a licensed financial expert, so it's up to you. You have full control on what you want to do, but do understand that ideally you can increase them. Just make sure you understand the risks that you're taking and that you can withstand the amount of pips that you're setting your stop loss to be moved up at. And just to give you an example, had I moved up the stop loss with Steve on this 25K account last week, and even this 3K, they would have, probably the 25K especially wouldn't have lost a few percent because it wouldn't hit those stop losses, right? It would have been able to withstand those and still been in those trades. But also our drawdown would have been higher right now because we also wouldn't have taken out some of those losses as well. So again, it's a balancing act. You have to just understand your settings and are you able to withstand it? Another thing I see some people do is they run only one pair, right? Like Jesse just runs one pair. Well, he knows he can withstand, depending on the settings he's running, much larger movements when you're only running one pair. But the more pairs you're running, obviously, the less movement you could withstand, because if all three pairs were to go against you, your risk and exposure is 3 times that of somebody running one pair, right? So yeah, just understand your risk. And if this is all brand new to you, maybe leave them at the default 250 until you have a better understanding. Get with your sponsor, ask about the calculator, watch the May 30th call to have a better visual of what these settings can withstand, so that you have a better idea if you are going to try to increase them. But don't go blindly changing settings on a live account, especially things like stop losses, without having a real understanding of the risks involved in what you're doing. And Steve, I do see we have some questions in here. Do you want to, should we go through these right now?
Yeah, let's do that. So you've already addressed the one from moving the stop loss from 250 to 300 pips. Again, it's all, and we sound like broken records, but gosh, the most important thing in all this, you guys, is risk. Run a demo first. We have a very small group of guys underneath me, headed up by Ryan Doktorzik and Al Franklin. And, we're even finding in our group, and we are more run like the Third Reich, right? Because everybody's got to attend these calls. It's mandatory, and, all kinds of stuff that we sort of force on the group. But we still find a lot of people in the group are like, oh yeah, I just set up a live account. I didn't run a demo. I'm like, what? You got to run a demo first to see how it works. I'm going to run a demo in it to eternity in this, just because it's going to help me just build more data from a standpoint. And there are Forex brokers out there that will let you run a demo that acts and executes just like a real account. So maybe minus a little bit of the slippage I've got to believe as well, but will still be close enough data to take a look at from a long-term perspective. But next question is, yeah, here you go. Congrats to Sherelle. Last week was my first week on Alexander, and I made 3% in less than 48 hours. Alexander is the truth. So there you go. Congrats. Is this week a good week to run, and which pair to run this week? And should I set high volatility settings as recommended? So we have high volatility settings running. I don't know if you're late to the call, but we talked a little bit about that in the beginning. The high volatility settings are on my Telegram channel if you want to see what they look like. And or here's the high volatility settings right here, showing it on my screen.
Yeah, and so for the person asking, again, the high volatility settings are simply just flipping the range multiplier and the position size multiplier from their out-the-box default. Again, you can go ahead and change those if you so choose. Please tune into the May 30th forecast call to have a better understanding of how that affects your software performance and the movements in the market. I see Oliver asked, are there any plans or possibilities to implement a similar feature like the trailing equity to single trade? So Oliver, I understand what you're asking. That's a little more complex. I can tell you there are many things being worked on with the developers with trying different ideas, such as if you've ever noticed the level 0 and 1 trades, the first 2 trades in a sequence use trailing stop losses themselves. we are looking to try to extend those into higher levels. It is something that the developers are working on. I have no date in mind. It's actually a very complex feature, but I will tell you it is something on a list they've been testing. Anne said she found Jesse K's Telegram channel, but she can't find your Steve's. I believe Steve's channel should be in the back office. If it's not, let me know and I'll make sure that it gets added there. Need to be able to run a few demos on the same VPS, but can't. So Jay, you can only run one account per software subscription that you have. In order to run multiple, you would need to have multiple software subscriptions. Can use a pair that has less red folders. Can that be one of the weekly strategies? So Luna, you got to understand red folder news is going to happen with every pair. It's just when is it going to happen? And yes, there are pairs that have more red folder news than others. Understanding that, you are always more welcome to look at data and history. There was a great call as well. That was actually the call where we introduced Jesse Kammer as an EA coach, and he actually showed some data on many of the different currency pairs that he was running. In a test demo account, he was running 25 pairs for about 9 months and got a lot of data on it. So, that could be a good call for you to tune into if you were wanting to make any changes to the pair you're running, and obviously demo anything first and get good data on it. But if you are looking to do something like that, I would recommend maybe looking at some of that data and better understanding it. Somebody said here, why is the hours before news set at 15 and after set at 60? So before 15 and after 60, well, the reason for that is it actually doesn't know when the news event ends. So it actually is simply stating that after a news event starts, it's going to wait an hour before turning back on. And it's going to stop 15 minutes before. So basically it's saying I'm going to stop 15 minutes before this news event and turn on 60 minutes after the news event starts. So that's why 60 minutes there, because it doesn't actually know when the news event ends. The software doesn't know that, it just knows when it starts. So it'll restart again 60 minutes after that event started. During high volatility, when's the best time to switch? Gracie, during high volatility, here's something very important. It's actually great that you brought this up because I want to make sure everybody knows this. The best time to practice being conservative is before you need to be conservative. And why I'm saying this is the way that this software works is that if you're already in a sequence, remember, if you're using Alexander, you pre-approve a sequence. If you go change your settings, it does not apply to the sequence you already pre-approved. And same with Einstein, if you're already in a sequence, it's continuing at the settings that sequence was approved at. So the new settings wouldn't apply until the next sequence was entered, meaning that you would have to wait for that trend to complete before your new settings would apply to the next trades, meaning that it's best, again, to practice being conservative in advance, not when you're trying to save yourself, if that makes sense. So the best time is, just practice proper risk management always. I know a lot of people sometimes try to go change things when it's already too late. And, like I said, conservative settings aren't going to save you when you're already running, moderate or aggressive and looking to save yourself. So yeah, I would just practice being conservative in advance. When you say high volatility, do you mean lots of pullbacks, which shoots the buy, or long trend, which doesn't? Dan, when we say high volatility, we mean a long trend, yes. So these settings are designed to be able to withstand a larger movement. If you go back to the May 30th call, you can see based on different account balances, how this would have actually been handled. And in this exact case, so I'll tell you the 25K and the 3K, what they could withstand real quick, just to be quick. This $3,000 account we're looking at, all three of these currency pairs could move 550 pips against initial entry before this account would margin call. So this account running these settings can handle 550 pips on all three pairs at the same time going against entry. So you can understand that that's a big difference. Whereas with the normal market condition settings, you could actually only withstand about 330 pips on all three pairs at the same time. So you're almost increasing your ability to withstand a larger move by 35 or so percent. And then if you took a look at the 25K account that we're also we have running here, that 25K account is also running at a 0.01 per 3,000 balance. It can actually withstand 900 pips on all three pairs at the same time, going against it before it would ever have its first margin call with the 1 in 500 leverage it's running. So you can see the high volatility settings do allow you to get stuck in a long trend longer, which obviously you know that the software isn't, a long trend doesn't suit this software. But at the same time, if you can have it work with the software and not go against you, that's more of what high volatility settings are designed to do. If that makes sense, Dan.
Yeah, and again, we're just flipping the range multiplier and the position size multiplier, just like I'm showing on the screen, guys. So, but we're going to close this down a little earlier today. So if you have any questions, please get them in there. And if you want, open up the chat window, click on the link to my Telegram channel, and please spread the word. So we're having a little bit higher attendance today, which is good. Ideally, attendance today is not where I want it to be, but I'm not sure it'll ever be where I want it to be, just by the laws of numbers. But make sure you guys get everybody on your team below you watching this, and don't take any excuses. You can go after them like we do our guys in our team. I mean, how bad's that, right, Tyler? I mean, God, the guy that's running the team, they're not even watching my damn call. I mean, I have no, I have no sympathy for you if you blow your account out. And
yeah, if you don't tune into these calls and you have, and I just want to touch on this, and I'll get back to the Q&A and we can end this call out. But, in the last 2 weeks, when I went to anybody that had a bad day, hit an equity protector, whatever it was, and I went and looked at their account and consulted with them, the first question I asked him is, well, did you tune into this week's Saturday forecast call with Steve? And every person's answer was no. And all the people that tuned in, no one really had any complaints. They were fully in the loop. They understood what was going on. They understand this is trading, and they're very comfortable with their risk and their settings and their management plan. The people who plug in the most are going to have the most success. You got to look at your success like an outlet, right? You are the plug and Steve is the outlet. If you don't plug into Steve, you're not going to light up, right? You're going to burn out. So come into these calls, look to tune in and understand what's going on. And then I do see a great question in here from Anne. She said, can I run one demo account and one live account at the same time with one subscription? She said, if not, this perhaps could be allowed in the future. It would help with the learning process, or even maybe you pay a very small addition to do this. And the company isn't officially, I believe, fully announced all the details to their new model, but I will tell you that we are going to have multiple licenses at heavily discounted rates. Meaning that soon you'll be able to buy multiple software subscriptions for very small additions as well. So you'll be excited to hear that. Mark said, how come high volatility starts Monday hour 1 instead of Sunday hour 14? Mark, I would never start Sunday hour 14 GMT time. The reason for that is you're jumping in right at market open, Mark. And Steve, can you go over to Euro JPY, Euro USD, and USD JPY in the market watch window and just right click and show the spreads real quick? I want to explain something. Go to the market watch window. Yeah, right click that one of those currency pairs.
You want to look at the JPY, Euro?
Just right click it, and then you should see a tab that shows up there that says spreads. Spread, yeah, see spread right there? Yeah, okay. Click that. And okay, so Mark, the reason that you ideally are not going to want to start trading until the earliest I would ever myself start trading is Sunday hour 23. The reason for that is at least 2 hours after market open. That's around 7 p.m. Eastern, Sunday hour 23. And Monday hour 1 is about 9 p.m. Eastern time. And the reason that this is done is if you actually start trading right when the market opens, the first 2 hours of market open, the spreads are really high. If you don't know what a spread is, it's the difference basically in your fill, your bid and your ask. So let's say you want to buy USD JPY, or let's say right now Euro JPY for easy math. Euro JPY you see right now has a 30-point spread. That's a 3-pip spread. That means just for entering the trade, you're already down 3 pips. Okay, when the market opens, sometimes I've seen those spreads in the 50s, right? And you're talking a 5 pip. You're entering a trade and you're already down 5 pips before you even get started, right? Why do that to yourself and get into trends sooner? Give the market some time to open, get some of the weird liquidity out and the spreads down, and just give it some time to calm before start trading. I know most people that actually use algos, many don't even start trading until actually Monday Eastern time, meaning they wait till the next morning. So I would always at least wait 2 hours after market open. So that's why that, Mark. Do you advise this? Let's see. And Mark, I know you said Pacific time. Please note that the time you put into the software is based on GMT time. So if you say Sunday hour 14, it's not based on the time zone you're in. It's based on the time zone that the software is in, which is GMT. So, but yeah, Sunday hour 23, that is going to be 7 p.m. But yeah, on high volatility, I like to wait a few hours. I just wait another 2 hours before starting. That's typically the key with it's just better to wait for the spreads to calm down, and you get a better accurate entry, better analyzation in the market, not prematurely entering any trades. And that's just, like I said, it's all a part of the good plan of management, right? You want to have a good management plan. If you guys are trying to become professional algo traders, yeah, you don't want to get greedy. And if that means waiting a few hours before you open trades when the market opens, that's the first part of discipline in trading, is just having a disciplined management plan. And I mean, Steve's been doing this long enough. He can tell you the same thing. I'm sure he's learned lessons. I've learned, all of us have learned lessons with greed. Greed's a big part of having success in trading, is learning the discipline.
Yeah, I mean, absolutely. Elaine, your question on not getting notifications from Alexander, I don't know. I don't know who set you up. Ideally, your team should have an onboarding guy like we do, and to get you guys on board. But you might want to open up a Zendesk ticket in the back office and find out what's going on with Alexander. But I tell you, a great news that the company is looking to make adjustments to the subscriptions. I think that's great. So it's just going to give everybody more opportunity to do what I said from the very beginning, right, Tyler? Run a demo. So, all right. So one other question I've gotten a lot, Tyler, well, everybody's seems to keep asking, well, how do I turn off trading? If I'm in trades, how do I turn them off? And I try not to get into too much detail with that because I just don't want them tinkering with the system, right? So anytime you go in there and
I mean, again, I'm not licensed to give financial advice, but everyone should have an idea of, what I would say is their max drawdown they'd be wanting to see before maybe they might be comfortable turning auto trading off. I'm not a fan of turning auto trading off personally myself ever. All I would do is I would change my settings if I was ever worried to restrict the software from taking more trades. And how would I do that? I would lower my max levels. Let's say, you're in and again, that could go against you too, because you could enter the next trade and it could swing and you could get out of the drawdown sooner too. So again, you just have to understand, but if you ever are in a worrisome time, and I wouldn't turn off auto trading. I would simply just lower my max number of levels so it doesn't take any more trades. But this way it can still manage, modify, and change trades if anything happens, a stop loss hits. This way you're not just entirely stopping the software from being able to make any form of controls or actions. You're just limiting it from being able to take new trades. And that's how I personally manage a situation. If I ever was to get into a risky time, I would just limit my max number of levels to keep it from taking new trades. But I wouldn't physically turn auto trading off, because that does limit the software's ability to modify, manage, and change any stop losses, take profits if it needs to. So yeah, that's my personal take on how I manage that situation. Everyone's welcome to do what they want, but again, for me, I'm not a fan of ever turning that auto trading button off, because I want the software to still be able to make commands and changes if it needs to. I just want to limit it from entering any new trades if that's what I'm looking to do.
Yeah, no, I want to end this call, and one of the reasons I brought you on, Tyler, is just comments on it, but also wanted you to speak to, because, let's face it, you're Mr. R&D, right? Director of R&D. Can you speak to what's going on just generally about the beta groups and some of the new software products that are coming out? Do keep in mind that, we are constantly on the hunt, guys, for other EAs. And Tyler will tell you this personally. He's probably sick of listening to me talk about it. But you just need we need a depth of a product group. So we're constantly trying to look for and or internally with some of our teams develop other expert advisor, other algos.
Yep. So to touch briefly on it so everyone can be in the loop, like Steve said, we're constantly looking for new things, trying new things. I got a hold this week of a close friend of mine that had a phenomenal EA, and we're going to start testing it actually this week in a small private beta group of just some of the corporate team. And, we have about 15 different softwares that we've been testing anywhere from ourselves, 90 plus days to, some that we're just starting now, as well as some of these softwares have track records. They've been running for, a year, 2 years, different things like that. So just understand that we're constantly looking for some of the best products in the market. And these are products that have not been accessible in a retail form ever before. We're continuing to strive to find products that they're looking to work in a retail model, but they previously were. And when I say weren't accessible to retailers, normally the best softwares aren't accessible to retail because the people who are using them are running some form of hedge fund and they're not looking to sell their product in a retail level. But here at Auvoria Prime, we have a great program and a great opportunity, and many companies and institutions and different people see that, and they're more willing to come around to working with a retail market like us. So we have some phenomenal products in the works. And if you saw on Sal's update call, I believe it was yesterday or the day before, he did an amazing update where he talked about our new model with EAs. So when we release new EAs, you're actually going to get to choose weekly based on the monthly subscription you're paying for, which, is $189 a month. You could change that subscription to be used on any EA every week. At the end of every week, you could change the EA you're using. So let's say it's a week where Steve goes, honestly, I wouldn't use Einstein this week. It just looks like it's not fit for this week. Maybe there's another strategy that's more fit for that type of market. Maybe it's a trending market where we know Einstein's not going to be as good in, a trending, or Alexander and Einstein aren't going to be as work as well in a long trending market. Whereas maybe we have a trending software, which it crashes and crushes, in the trending market. So we're going to move to a model where you're going to actually be able to choose your EA weekly, your EA of choice that you want to go into the markets and battle with, right? So that's going to be really cool. And like I said, we're really moving forward. Some of these beta groups, we've had some larger beta groups going on privately with some of the top product users that we've seen in the community. And the results have been phenomenal so far that we've been seeing. And we're just really excited to actually start rolling out some of these new products. And when I say soon, I mean, we're not talking months from now. We're working. We are working on, I'll tell you, its top priority is rolling out some new products for all of you. So if that got you really excited, it got me really excited. I'm fired up. So throw it back to you, Steve.
Yeah, no, that's good. And now Tyler, with that fell swoop of that last statement, has increased my workload twofold. Thanks, brother. So now I got to figure out all the other AEAs, right? All right. So everybody, thanks for participating. Again, today's the 13th of June. We are going to be ending the call. Do click on the link to Trade Tracking with Steve Federal, yours truly, your risk manager in Telegram. Stay tuned. If you guys have any questions, you can always send me an email, which is fine. Just do not inundate me with questions like, what do I do if I'm in drawdown? Because the answer to that question is you got to go back the last 2 or 3 weeks and watch all the calls. We explain it ad nauseum in those calls. But everybody have a great week. Let your heart not be troubled. At some point, the Forex markets will level themselves out, and we can get back in the aggregate, I should say, of beginning to take up on profitable weeks. Do keep in mind that with some that have really run this software for a long period of time, they have had maybe 4 to 5 weeks losing out of 52 weeks of the year. So we're going to show some of that coming up. Depends on what I can show and what I can't. I have to get some permissions to look at some of these FXs, but I want to show some of this stuff next week. So, and you're going to have to stick around for a chunk of a call and listen to me drone on to get to some of these, because I think it's important for everybody to understand long term that the current EA we're working with, either in its whether it's Alexander with the notifications or Einstein, um, it has worked. It's pulled itself out of drawdowns. Some cases, some big drawdowns, which kind of stinks. Hence the volatility settings. So we're looking to limit that for you guys. But wish everybody a great weekend and be well.